Assalamualaikum and hi everybody. Welcome to EMAZULL and Finance channel, and in this video I'm going to share with you about several ways you can obtain capital without having to go public. My name is EMAZULL. Be sure to subscribe to get latest content. In one of the lessons in this channel, I have shared with you that large enterprise can go to investment bank if they want to raise capital through issuance of shares. Now, let's say you are an owner of small size company developing a fintech apps. We call this kind of company a startup company. You have the product or the apps and you want to expand it for public to use it. In order to do this, you need more capital. The problem is you might not have sufficient money to expand your business. To go to investment bank, it doesn't seem an appropriate idea because the bank would think that you are just a new and small company that are not ready yet to go public. Plus, the cost of getting their services is high. So what can you do? In this case, you can involve in many business pitching sessions. In the sessions, they normally have people with lots of money who are looking for new business ideas like yours. They are called venture capitalists. So when you are in the business pitching session, you will need to present your idea in short time period, maybe about 15 to 30 minutes. If venture capitalists think your business proposal has growth potential and attract them, they will offer you loans. Some venture capitals just offer loans. Some wants to gain ownership and put some level of control. So it actually depends on the loan provider. The opposite of venture capitalist is angel investor. Why they are opposite? Because angel investors are more towards helping a new business to start. They normally are a group of wealthy individuals who have invested in many small businesses, and they are also entrepreneurs. So they understand how difficult new business wants to kick off. That's why when they invest, their terms are more relaxed than venture capitalists. It is like this. For example, now you are a warung seller selling cakes and delicacies. And I happen to have extra money, and one day I go to your small warung to buy a cake and found it to be very delicious. So I started to buy regularly. Then I found that why not I help you in selling the cake, but not as a seller though. Then we discussed. I said, since I have extra money, why not let me help you by injecting capital to boost your sales? When you have extra money, you may sell your cake online. Even if I don't have sufficient money, you don't have to worry. I can invite other friends, Siti Rohaida, who also like me, to join us. So, can you see the difference here? In this case, Siti Rohaida and I are angel investors. Now, let us see the last type of private financing. It is called private equity. Okay, you can think private equity as investors who invest directly in your company or buy out your company. Let us say you have a big company that is listed in stock exchange market. Let's name your company Chicken. And apparently, someone who is very wealthy is interested in the company. That guy, through his company, buys 60% of your company. So in this case, it means 40% of shares is owned by you and another 60% is owned by that company. There is no more public holdings. Your company now is being delisted. It is now limited partnership company. The capital that new company inject can be used to mobilize Chicken to a higher level, perhaps with new technology and new management skill. With their holdings, your company may have new name, that is Chicken Plus. Okay, now, you have understand that other than obtaining financing from public, you may go for private financing. It can be in terms of venture capital, angel investor, and private equity financing. Be sure to understand the differences between them, as different stage of business operation might require different type of financing. Until here, we will meet again in the next lesson.